Happy Wednesday, everybody. Welcome to another episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. It has been an incredibly eventful week, and it is only Wednesday. Let's jump in. We are certainly living in interesting times. We begin today in Asia. Yesterday, late Tuesday, saw the resignation of Nepal's Prime Minister, KP Sharma Oli, following 2 days of violent protests that left at least 19 dead and hundreds injured. The shock move has thrown the Himalayan nation into fresh political and economic uncertainty. While the trigger for the unrest was a short-lived government ban on social media platforms, the demonstrations reflect far deeper frustrations with governance, unemployment and inequality, issues that now risk derailing the country's fragile economic recovery. For regular viewers of Market Update, this all sounds a little familiar. Indeed, this is the third video this week and the third video in a row in which we have discussed a rolling government collapse. Events have escalated fast. Demonstrators yesterday torched Oli's private home and the Prime Minister's office, as well as setting fire to sections of the official presidential residence, Parliament building and Supreme Court. So, not very good. Oli's sudden departure creates a power vacuum likely to spark jockeying among opposition parties. Analysts warned that the coalition instability could slow policymaking at a time when Nepal urgently needs structural reforms. Investor confidence, already fragile, may take another hit as businesses weigh the risks of further unrest and policy paralysis. A prolonged leadership struggle could delay budget approvals, infrastructure projects, and fiscal commitments critical to stabilizing growth. Nepal's economy is heavily reliant on three pillars: remittances, tourism, and hydropower. Each faces heightened risk. Tourism, which contributes about 7% of GDP, is especially vulnerable to images of unrest in Kathmandu spreading internationally. Neighbouring countries such as India and Bangladesh have already issued advisories urging citizens to stay indoors and avoid travel. A prolonged decline in visitor arrivals would erode foreign exchange earnings and deepen Nepal's current account pressures. Remittances, accounting for nearly a quarter of GDP, are a steadier lifeline but could be tested if migrant workers lose confidence in government stability or if political unrest disrupts banking flows. Hydropower, often touted as Nepal's long-term growth engine, requires sustained political backing and foreign investment. Beijing's involvement in infrastructure projects has grown in recent years, but foreign financiers may hesitate to commit new capital until governance stabilizes. Underlying the protests is a demographic challenge. Youth unemployment stands at 22%, among the highest in South Asia. For a country where over half the population is under 30, this creates fertile ground for discontent. Protesters' slogans, "Shut down corruption and not social media," signal deep distrust of political elites. Unless the next government can credibly address job creation and anti-corruption measures, unrest may persist, adding costs to security, disrupting commerce, and deterring both domestic and foreign investors. The World Bank projects Nepal's economy to grow 4.5% this year, but those forecasts assumed relative political stability. With violent protests, curfews, and cabinet resignations shaking governance, that outlook now appears increasingly vulnerable. Climate risks and global external shocks already weigh on the small, landlocked economy. The added layer of political volatility threatens to stall reforms, dent investor sentiment, and choke off growth, just as Nepal seeks to climb out of poverty and strengthen its strategic role between India and China. Next up, we move to North America. US job growth was far weaker than initially thought in the year through March, according to new government data that intensifies pressure on the Federal Reserve to cut interest rates. The Bureau of Labor Statistics, BLS, preliminary benchmark revision showed payrolls will likely be marked down by a record 911,000 jobs, or 0.6%. That means average monthly job creation over the period was closer to 74,000, roughly half what the earlier report suggested. The final figures will be published in February of next year, 2026. The findings show that the recent slowdown in employment followed an extended period of more subdued growth. than markets and policymakers realized. Fed Chair Jerome Powell has already acknowledged mounting risks to the labor market, while two colleagues argued for rate cuts as early as July. Traders widely expect the central bank to begin easing policy at its September 17th meeting. The revisions affected nearly every major industry and state. Wholesale and retail trade bore the largest downward adjustments, followed by leisure and hospitality, professional services, and manufacturing. Benchmark revisions occur annually, but the scale of this year's downgrade, the largest on record, has drawn intense scrutiny. Political tensions flared in Washington as US President Donald Trump seized on the revised numbers to rail against the Fed and the BLS. He fired the agency's head last month, accusing it of incompetence. Quote, "Today's revision proves President Trump was right. Biden's economy was a disaster and the BLS is broken," end quote, said the White House press secretary. The Labor Secretary also criticized the statistical process, calling for greater accuracy and impartiality. Yet economists stress that revisions are routine, reflecting updated data from state unemployment insurance records that cover nearly all US jobs. Some analysts cautioned against exaggerating the implications too. Chief economist at RSMUSLLP, for example, noted that in an economy employing 163.3 million people, a downward revision of 911,000 spread over a year is, quote, "not that large from a quantitative point of view," end quote. Still, markets took notice, with Treasury yields rising and equities fluctuating on the news. The BLS has faced unusual challenges since the pandemic, as its models struggle to capture the effects of rapid business creation, closures, and immigration. JP Morgan Chase chief executive Jamie Dimon said the revision merely, quote, "confirms what we already thought. The economy is weakening." End quote. US-based Bloomberg Economics expects final revisions to confirm that the business cycle peaked around April 2024, suggesting the US may already be in a recession or at the start of a new cycle. We will have to see, but we will be following this as well as all our other major stories from around the world on Market Update. If you'd like to come along for the ride and follow the most important developments in the world's most dynamic markets through grounded and sober analysis, an old school approach to the news, consider subscribing to Market Update, hit the bell notification icon, and you will be. If you're getting some value from today's episode, don't forget to hit the like button, and if you'd like to support the channel financially, the Buy Me a Coffee link is in the description below. Thank you so much. And finally for today, investment in Europe's defense technology startups has accelerated sharply since Russia's full-scale invasion of Ukraine, marking a dramatic shift in attitudes from venture capital firms that once shied away from military businesses. According to data compiled by PitchBook, companies in the sector have raised 2.4 billion euros since the start of 2022, including 1.4 billion euros in the first 7 months of this year alone. That is a remarkable leap from the only 30 million invested in 2020 and 150 million in 2021. The growth reflects both rising geopolitical risk and a reassessment of Europe's role in securing its own defense capabilities. UK-based The Financial Times reports that at the forefront of this boom are three unicorn startups: Helsing, Quantum Systems, and TechEver, each valued at more than 1 billion euros. Their products range from autonomous strike drones to battlefield data software and unmanned submarines. Germany has emerged as the epicenter of activity, reflecting its role as Europe's largest supporter of Ukraine after the United States, as well as Europe's biggest economy, and its willingness to finance defense spending through unlimited borrowing. Several executives point to the February Munich Security Conference as a watershed moment. A combative speech by US Vice President J.D. Vance raised concerns over the durability of America's security commitments to Europe. Quote, "Now we are getting to the point where Tier 1 branded funds are recognizing defense technology as a viable opportunity," end quote, said the general partner at Expeditions Fund. Helsing, founded just 4 years ago, exemplifies this transformation. Initially a software company, it has expanded into hardware with drones for Ukraine and plans for autonomous submarines. Backed by Spotify founder Daniel X Investment Group, Helsing recently reached a €12 billion valuation. Similarly, Stark, a new entrant spun out of Quantum Systems, has grown rapidly to a €500 million valuation, producing lethal drones for the German military. Other startups are targeting niche opportunities. Swarm Biotactics has raised €13 million to develop controllable cockroaches equipped with micro backpacks for covert surveillance. Cambridge Aerospace is working on cost-effective interceptors against missiles and drones, while Munich-based ARX Robotics, spelled ARX Robotics, is deploying autonomous land drones capable of reconnaissance and casualty evacuation. Ukraine remains a critical proving ground. Its thriving startup ecosystem, combined with opportunities to test technology in live combat, has drawn in both domestic innovators and foreign firms. Wild Hornets, a grassroots Ukrainian drone maker funded by crowdfunding and donations, has already claimed significant battlefield impact. The UK, meanwhile, is beginning to attract more defence investment too, with Tekeva and Stark both establishing production sites. London's flagship arms trade show this week is expected to spotlight many of these companies, showcasing how defence technology has moved firmly into the mainstream of European venture capital. As Bulletin Capital partner Rana Yared, speaking to the Financial Times, observed, quote, "There is movement to Europe being more participatory in its own security. That is, I think, the arc of the next 10 years. Okay, that is today's episode of Market Update. Thank you so much, everybody, for watching. Have a good Wednesday, and I will see you for another update either tomorrow or on Friday.